So today is day 3, and on today's episode, we'll be looking at multi-time frame analysis. So we'll be looking at how we correlate time frame with structure, and on that, we're talking about swing trading. How time frame can actually determine the kind of trader that you're going to be in the market, whether a swing trader, a day trader, or a scalper. All right. So without wasting much of your time, let's get right into the video.
If you have any question as regards my teaching, maybe on the video that you've watched previously, you can drop the questions in the comment section. I'll be looking out for the questions, and if you drop any question, I'll be glad to answer your questions. All right. So for today's topic, I'll be teaching multi-time frame analysis. Now, multi-time frame analysis has to do with how we combine time frame with structure, and the fact that we can't use one single time frame to make analysis in the market. So to make an idea out of the market or out of your analysis, whether a buy or selling idea, you have to combine different time frames. You have to look at the market in different time frames to, be able to draw out a particular buyer. Now, on multi-time frame analysis, I'm going to, categorize them, categorize this multi-time frame analysis into 3 time frames. All right. Now we'll be using 3 time frame. Multi-time frame analysis does not mean you'll be using all the time frames, like you use 5 minutes, 3 minutes, you're using no. So you have to pick specific time frames. Maybe for this class, I'm choosing 3 because 3 is what I use. So we are going to choose 3 based off of the kind of trader you are. We are coming to this later. We have swing traders, day trading, and scalping method. We're coming to this later, but I'm going to be choosing my time frame. I'm going to be choosing time frame for my multi-time frame analysis, and there's reason for these 3 time frames. All right. Now, before that, let's talk about time frame. We'll have time frame. What you're seeing right at the top here are time frames on your trading view. All right, where you make your analysis. We'll have time frame ranging from seconds up to 1 month. 1 year. You can go as far as that. All right. So all of these are time frame, but we'll have really important ones that we'll make use of. We don't have to go to monthly, 1 year to actually start using those time frame. We can make use of the really lower time frame and make profits off of the short-term movement, right? Now, like I said, I'm making use of 3 time frame. Now, the first time frame is to determine my trend. So first time frame is always to determine my trend, which is the highest of the 3 time frames. And I have the second time frame, which is to determine my current market structure. All right. Then I have the third time frame, which is the lowest amongst the 3 to determine my entry and exit points in the market. Now, I'm going to come to this. We'll have 3 type of trading method. All right, though it can be more than, I think there's position trading, but I'm not going to add that because that has to do with really higher time frame. All right, but let's just focus on this since this is the one we have, like we'll have most of the traders doing in the market. We have swing trading, which has to do with really higher time frames. All right, now if you come to this, these are time frames that I've mapped out for this. All right, for the swing trading, we make use of 3 time frames: the daily, 4 hour, 1 hour, and 30 minutes. Now, the traders in this category, all right, take trades that take time to actually play out. All right, they don't trade on day-to-day basis, so they wait for weeks or days for their trades to play out. All right, so uh, the reason for this is because they use time frames like this: the daily, the 4 hour, the 1 hour, and this means for each of these time frame you're seeing, if you go to the chart, we are currently on the weekly time frame, and if you go to the chart, each of these candles you're looking at means it took 1 week to completely form this candle. If you go to the daily, it means that each of the candles you're seeing on the daily time frame took 1 week to completely form that particular candle. So if you are dealing with daily candle, you know that whatever trade I did that is coming off of this time frame is something that's going to take a little bit of time to play out. All right, so that's for swing trading. Now for day trading, we make use of time frame lower than the swing traders, right? Because this trader has to execute and exit their trade that same day, probably. So we have to make use of time frames that are lower than the swing traders. All right, so we'll have the 1 hour, we'll have the 15 minutes for the second time frame, and we'll have 5 minutes for the the third time frame. And this is all within a day. All right, we'll have 24 hours in a day, and trading off of the 1 hour time frame, which means we need, like, although we are not using the whole day to trade, but these time frames pretty much fit into the 24-hour trading 24-hour trading hours we'll have in a day, right? So we'll have the last one, which is scalping. These are traders in this category take advantage of the short-term movements in price on the lower time frame. All right, there's some scalpers that even go as low as the second time frame to trade off of. All right, so we'll have the higher time frame. Out of the three time frame, we'll have the first time frame, which is to determine the trend. We'll have the second, which is to determine the structure, and we'll have the last time frame, which is to determine the entry and exit. All right, now let's go to the chart and see this for ourselves. So we're going to start with the swing trading method, where we use the daily as our first time frame, which is to determine the trend. Now on the daily time frame, we can see, what are we seeing here? We can see that on the daily time frame we have an impulse, market corrected. Now we'll have another impulse, and more like we're having another correction in the markets, right? So I'm going to play this to the end. We'll have another impulse, then we'll have another correction. Seems like market came to a key level and is reacting from that key level. All right, this is where we can map out now. Right, last time market has to pull back to extreme to react. All right, so this is pretty simple. Like I've said in the previous videos, reason you need to watch those videos before you come. Market moves in three phases: impulse, correction, and continuation. So this is our impulse, which happens with few candles. You can see how many pips that market dropped in just 3 candles. Then look at the correction, has to take a whole lot of time to actually get to the premium level. Then we'll have another impulse. You can see the impulsive candles. Then we'll have another correction. The market is looking to make another new impulse right here, right? So since we've seen and we've actually gotten our trend from the higher time frame, which is the daily, so we'll have to go to the 4 hour time frame to see the current structure of the market. Now on the 4 hour time frame, this was the structure that we had. This was the correction we had on the daily that pulled back. Now the current structure is this, what we are seeing right here. Now on the current structure, we have this impulse, right? Now we have this impulse here that broke structure, market corrected, broke another structure again. So more like we'll have impulse, correction, another impulse, all right? Then another correction, then we'll have here again, market corrected, then we broke structure, and now market is looking to make another in with this is impulse, market is looking to make another correction. So this is the current structure. So all we have to do here is mark out key levels that we want price to come to. All right. And once price comes to that zone, what do? We'll go down to the 1 hour time frame. So 1 hour time frame is where we look at for, is either we wait for price to get here, then we look for our entry models and sell price down, or we can start looking at this structure here. All right, so pretty much there's nothing here. This is just markets correcting, and you don't want to get caught up, because sometimes it is probably we might not get to this point and start dropping again. All right, so reason most of the time you just have to wait. You just have to build that patience to, like, wait for price to come to your areas of interest or your point of interest, and you trade off of that zone. That's the best way to do it. All right, so that's for swing trading. We've actually done for swing trading. Let's look at day trading, that we have to start from the 1 hour time frame. Now for day trading that we'll have to start from the 1 hour time frame, this is still like very simple. Now for day trading on the 1 hour time frame, this is structure, right? We're looking at structure. Market made an impulse correction, impulse correction, impulse correction, impulse correction, right? Then another impulse. Let me not just use this structure. Let's look for another clean structure back here. Mm, let's use this from here. Now looking at this on the 1 hour time frame, we can see that price is bullish here. We have this impulsive move that broke structure. The market corrected. All right, we'll have another impulse that broke structure. Now what is market doing? We're having that correction. Now the first time frame, like I said, the 1 hour, this is day trading. So day trading time frames. All right, so the first time frame was to determine our structure. The second time frame is to determine the current structure. Now the current structure is happening on this correction. All right, so we'll have to move to the 15 minutes to determine our current structure. Now on the current structure, we broke this low here. We broke this low here. All right, and this was our impulse. Market corrected. We had another impulse that broke structure. Then after that, we had this correction, right? Then market, this is another low that wants to take out. So we want market to give us another impulsive leg that is going to break this low. And let's see what it does. You see another impulse. So we finally broke that low. And now market is back at a key level. All right. Key level is what we're going to talk in our next class. So you better be present. All right. So now that our market have made an impulse and has tapped into a key level, so it's time. You don't have to start looking for sales again. All right, though we've made an impulse, we are waiting for correction. So let's see how that correction goes. This is the highest point, by the way. This is the highest point, by the way. So we are waiting for market to correct. But if we see a shift in structure, that means we're going to shift our bias, because on the 1 hour time frame, which is our first time frame, this market is already bullish. All right. So we've had our impulse break of structure. We just waited for correction to happen. And on our second time frame, this is the current structure, which is downtrend. Now, the last is our entry time frame. And on that time frame, we'll have to wait for confirmation that this market wants to buy from here now to continue what's bullish before we can engage. And let's see. This is the correction phase. Remember, so on the correction phase, market corrected, tapped a key level, then drop. But you can see it failed to make a new low. So we've formed a low, a higher low now. So let's see if this higher low is going to break this high here. So if it breaks it, this is a number one sign of structure shift. Then we'll have to use other confirmations to actually enter if it presents. Now, this is not a break, this is a sweep. You can see we first swept it, the market came back to break it properly, right? So broke it. Now this is like an impulse. Now we've had correction, and let's see what happens. So we've had correction, impulse correction, market went ahead to take out this high, although this is not a break of structure, but we're gonna see till we get a very good confirmation. Now we've had another impulse, right? Now this impulse is breaking structure because we've broken above this high and we've closed above it. All right, now remember we made a higher low. This was supposed to be a correction to this zone, but we've already shifted structure coming back, so this zone is no longer valid. Now we made a higher low, market has already shifted to an uptrend in this range, so this doesn't have to hold anymore. All right, so we made our impulse, market corrected, we made a new impulse, so we are waiting for correction now. So all we have to do here is mark our key level. All right, so this is the key level that we have. This is the our swing low, because we had break of structure, so we have to wait for price to come back to this zone and give us continuation. So remember, for our entry we'll have to use the 5 minute time frame. Now we'll have to go to 5-minute time frame now that price has come to our area of interest. All right, this is our entry time frame now. Now look at what price is doing. You have to pay. I have to play this really small. Now look at this. Price tapped into this POI, came deep into it, and closed above it. More like we had a drop session. Then you can see these buy candles that came above all this bullish engulfing. Now, if look at this, we have 3 straight bearish candles. Then after that, we had this about how many bullish candles? About 5 of them that came to close above this high where this bearish candle started. You can see this is a confirmation already. This is bullish engulfing. We dropped, then price came all the way. If you go to the higher time frame to check this, this is a clear bullish engulfing because we dropped, we made a bearish move, then price came all the way to close above that bearish move. All right. But if you don't want to go for this, you can still wait for more continuation, more confirmation. Now look at another confirmation. Price came here. All right. We're supposed to sell from here because this was the last high, this was the last low that was made. So price came here, we're supposed to sell down, but what did we do here? We made a higher low. Then price went above ahead to break here. So if I'm to take my entry, this is where I'll be taking it from this high here. Then I'll put my entry here. I'll put my stop loss right below that low and see where I'll be targeting this high. And I might even target the overall high here, which is this one. So let's see how it goes and see it play out. Oh, we actually got stopped out, but so this entry, this stop loss should have covered this low, but yeah, we're still good. Let's just look out for another setup. Okay, look at this. This is another confirmation. This is like a trend line breakout now, and I'm gonna put it this way. Take my entry from here and my stop loss covering this low. So we still have the same targets, and let's see how. Let's go to the 15-minute time frame. Whoa, you can see that. So we smashed CP on this one, and on this one you can see we hit stop loss. We got this one. So this is 1:2, almost 1:4, 1:3. We just lost it. So if you are taking this to trade, you would still be up in profit. And see, this was, I just had to cut it here and just not like I looked at it before. You can see this is just real, me following my strategy. All right. Yeah, we got stopped at here and we won this one. So I hope with this um explanation you now understand how time frame works. We structure how to combine different time frames and make your analysis. All right. So that's all for multi-time frame analysis. First time frame to determine trend, second time frame your current market structure, the third time frame is to determine your entry and exit, and that's all you need to know. All right, so that will be all for this video, and I'll see you guys on the next one.